is Gina Bessire, manager of the Zions Bank Business Resource Center. And Gina has extensive background in advertising, marketing, business planning, financial literacy, and is herself a successful entrepreneur. I'm excited to have her here with us tonight to talk about how crowdfunding and traditional lending can work together. Welcome, Gina.
Thanks so much for having me. I'm really excited to be here for this major milestone, and so excited for you and the Idaho Women's Business Center in our state to have this, first of its kind platform across the nation. It's just really great.
I'm pretty excited too.
It shows.
Can you start by telling us a little about the Zions Bank Business Resource Center, because it's a pretty unique program?
Yeah, it really is. It's a unique unit within a financial institution, so no other institution within the state that we're aware of has one. And essentially what we're charged with doing is helping people start, grow, and fund their operations. And then we do that with a variety of ways. So we offer a workshop schedule. We also work one-on-one with people, and we have a really deep referral network of business professionals who have deep subject matter expertise that can really help business owners when we don't have that expertise ourselves. And what we find is that once we transfer that knowledge to these business owners, it really helps to build their confidence and their capacity to be successful. And in the last 6 years that we've been in existence at Zions Bank, we've been able to help business owners with $43 million worth of funding. And so, between having the unit itself within the bank and then also being able to, get that much capital out into our community, we really feel like it demonstrates how committed Zions Bank is to the small business community. I mean, it's really where our heart is, and we really feel that small business owners are the true economic engine and job creators in our communities. So we're very honored to work with them every day.
I think we're all feeling that way, and here to small business being the economic driver.
Yeah.
That being said, a lot of small businesses have challenges accessing traditional lending. So could you help us understand how financial institutions make their decisions? Maybe demystify it a little bit?
That's a great point, because I'm really glad for the question, because I don't think there are a lot of people that really understand what that criteria is. And it's the same criteria whether you're on the consumer side or on the business side. I'm going to talk about the business side tonight, but essentially lenders use something called the 5 C's of credit. And what they stand for are, let's see if I can get them right. So character, capital, capacity, collateral, and conditions. Yay, I did it. So I'll go through each of those and just kind of demystify them for you so you have an understanding, of how it works. But character, essentially, a large part of the character piece is your personal credit score. So what the bank is looking for is, what are the credit products that you've taken on in the past, and how have you managed those going forward? Have you made good on your obligations? And can you be trusted to do the same with ours? And so that's a big component of it. One of the other pieces is we really look at people, whether they have business ownership experience or previous industry experience. Those 2 factors are really, really big ones in terms of sort of indicating future success. And so that's really what makes up the character piece. And then the capital piece is, what we call skin in the game, an owner injection, a down payment. The bank really wants to be able to share in the risk with the business owner. So we don't want to be the only entity, risking our capital. We want to be really good stewards for our deposit clients that we have at the bank. And so, and protect those investments. And so, the capital piece, kind of depending upon, what product you end up seeking, probably a good rule of thumb for your audience to keep in mind is that about 20% of the project cost is what you would be required to bring to the table. And we know that people who, invest their own money, you're demonstrating to the bank that, you believe in yourself, you're willing to put your own money on the line, and you're going to be very committed to what it is you're trying to do. So that's 2 of them. The third one is capacity. So we want to make sure that we are lending to business owners in a way where they can really afford what it is that they are seeking. And so we do real deep dives into projections and the number side of the business. And so when we're doing that, essentially what we're doing is we're looking at, what is the revenue potential for this business, and what are the expenses associated with that revenue, and what's left over at the end with profit. And so, we have a calculation that bankers call debt service coverage. And so it's a ratio of essentially, how many dollars in debt are you taking on versus, how many dollars in net profit are you able to produce. And we build in some wiggle room there because we want to be sure that a business can survive a pandemic, for example, And so, if you look at the length of the term of the loan, or you look at the business cycle of the business, how long they're going to be in business, they're bound to come up against, obstacles and challenges and hiccups. And so, we really kind of build that buffer in order to, help them make sure that they can afford the payment. And then we talk about collateral. So collateral are the physical, tangible things that a business might have to pledge and help secure the loan and mitigate some risk. And so, when you think about a loan for equipment, for example, or someone's asking for a loan for real estate, it's really easy to collateralize those loans because you're using the loan proceeds to purchase something that you're going to turn around and then use to secure the loan. And so with other things it's a little bit more challenging. And so if you're an existing business, we look at what other assets do you have, what other physical tangible things could you potentially pledge, and if there's a shortfall, we sometimes turn to the individual business owner and look at what their personal situation is. And so that's the collateral piece. And then the final piece are conditions. And so we never lend in a vacuum, right? So we want to be looking at, what's going on outside of the business. We like to look at what industry the business owner is in. And so is that a growing business? Is it a declining business? Is it stable and mature? We like to look at what the economy is doing. And so, we are officially in an economic downturn, and that was predicted to happen after our, long run after the recovery from the Great Recession. And then a big one for us right now, when we're looking at loan requests is, we're in the midst of a pandemic. I think we had a 1,500 case day, an incident this last week. And so, things are not going in the right direction. And so, as much for our benefit in protecting our investment, but also for the business owner, when we're counseling them, we really sit down and in this environment are talking to them about timing. Is this the best time to be opening a business in the midst of all this? And, in staging things, and what is plan, B, C, D, E through Z, because it's just such uncertain times right now. It's just, a really big challenge. And there are opportunities, of course, too, where someone may want to move on something, and that's why they're approaching us. So, that's kind of how we look at the whole lending decision. And we certainly don't hardly ever see or expect you to be, exceptional in each area. But what we want to know is, really upfront, where are the challenges and how can we mitigate those so that we can get to a yes? Because believe it or not, we like to say yes more than no.
Well, thank you. I understand the 5 C's better now than I did, and I thought I had a pretty good grasp before. Now I feel really, really steady. But what I kept thinking, and you were talking about conditions in that last C, and I was thinking, well, how could crowdfunding help an entrepreneur to make the case that the conditions are right for a business that they want to start? And I was thinking that crowdfunding and the proof of concept that crowdfunding can bring, do you think that would be, when they're looking at the loan application, would that be a plus in the conditions side?
Oh yeah, absolutely. I mean, I don't know if you call it a side benefit, but I think the sort of test marketing and the marketing aspect of crowdfunding are huge. And so, we go through a pretty rigorous process with our business owners, to really do a lot of market research and get to the place where we have our best possible guess that, this person can be successful in this and it's a really viable business. But if they've performed a crowdfund campaign and they can demonstrate that the community support is there for them and that they have a built-in customer base already, that goes a long way. And that could be a mitigating factor with someone who, say they don't have business ownership experience and they don't have industry experience, but here they've had this successful crowdfunding campaign and they've demonstrated they've got people on board. So that would definitely be a positive for us for sure.
So it looks like it might hit the first C of character too, with the experience with the business.
Exactly.
So, all right, we've got 2 of the 5 C's that crowdfunding can help support. All right, so how about capital? Can you think of a way that crowdfunding could support capital?
Well, the way I understand it, and I was really impressed with Allie in the former segment saying it took her about 10 minutes to understand crowdfunding, because I'm still on that path of discovery. But I think after having had many conversations with Kathleen, I'm finally on the path where I could actually describe it to someone else, with some authority. But so the capital piece, I see there being several ways that crowdfunding can help with that. And what I'll say is this is probably, of the 5 C's, this is the one that we have the most challenges with our borrowers. I mean, it's tough to put that money together, right? Where is it going to come from? And so, when we know there's a challenge in that area, we try to work really creatively with our borrowers to come up with, how can we piece all this together? And so, perhaps someone has something of value that they could, for example, sell, right, and generate some revenue to be able to put into that injection bucket. Perhaps someone has equity in their home that they could leverage. Someone might have retirement savings that they can convert to stock in their own corporation. We've had people come to us where, a parent of a young adult is willing to give a gift to someone, to help launch their child in their endeavor. And sometimes people bring an investor, a money person to the table, a partner who has the cash, but then the other partner, the person we may have originally have been talking to, they're the one that's going to put in the sweat equity. So, those are all sort of the pieces of the pie, and I just see crowdfunding being another one of those. And for me, I can see it working in 3 ways. So, there's the work that you do to prepare a crowdfunding campaign and the expenses that you incur doing that. And so what we would suggest is that you really document those super carefully. And I'd like to say that one of the best ways to do that is to have a separate personal and business bank account so that, that documentation, that substantiation can be there. And then, let's say you want to come to us for a loan. Those things that you've already spent on your business can sometimes be applied to your injection. So that just lowers the amount of money that you'd have to come to, the table with. And then another benefit that I see is, my understanding, and we're still working through this at our institution, is the SBA allows for 50% of crowdfunding proceeds to be used toward that injection as well. And then there's, how each individual financial institution interprets those types of things. And so, that's an opportunity and something that we're looking at, in partnership with you. And then you know way more about this than I do, but in terms of, the equity crowdfunding piece. And so I know that that's an option as well. So, you've got this lender. Lori was talking with me earlier about how they've formed an LLC that all these lenders go into, and then they become the one single entity that is an investor in a business. Do I have that right? Is that accurate?
Yes, there's a lead investor, and so it goes onto your cap table as one investor.
Right. Yeah, so it doesn't muddy the water and make it, make a lot of, cooks in the kitchen and all that kind of thing. So, I think all those pieces could really, help shore up the capital piece that I would say is the single most challenging thing for people, borrowers that we see.
Well, that's really makes me happy to hear that crowdfunding can help strengthen. I've actually seen a case study from a colleague who works for a platform, and their platform helped a business to raise equity, and then that equity was used in order for them to be able to get an SBA loan. And so I think that what's coming up here is that crowdfunding is new, and that you need to talk to your bankers, your lenders, and I also heard something that, I was thinking about Chrissy when you were talking about if Christy puts together a really sparkling new website and she hires someone to do it, would that be considered equity injection for her
something
business?
We can very well, yeah.
So I think what I would say is, what would be the process? So let's kind of talk this through, because I think, again, the Business Resource Center has a unique position because you're not the loan officer. You work with the client. So someone comes to Crowdfund Idaho, and we see, because when we work through the process, we're not just looking at crowdfunding, we're also looking strategically at what other types of capital, how can we build on what they're starting with crowdfunding. So would it be a great time when they're preparing their crowdfunding campaign to come and talk to someone like the Business Resource Center?
Yeah, absolutely. I really think that is a way to go, because we try to work with clients so that they are looking at their funding needs in a very kind of global, strategic way, rather than addressing each funding need as it arises. And this probably happens in the crowdfunding world, and it happens in our world. You may take some action now that could preclude you from taking action later. And so I would think, particularly with a crowdfunding campaign, you want to make sure you're crowdfunding, your biggest bang for your buck, right? The thing that's going to be perhaps the sexiest thing that your community is going to want to get behind. And so, at Zions Bank, our bankers and our Business Resource Center in particular, we really approach relationships with borrowers and clients in a very advisory kind of capacity. And having a relationship with the Idaho Women's Business Center is so great, because I think their approach is really similar, where we have a safe, judgment and jargon-free environment, where we can sit down with people and they can share what they don't know. Not many people go out and search for a business loan. They just don't take a business loan out all that often, right? And so it's typically a very novel process for them. And so we do a lot of education. And it's, I saw it with the panel of folks up here previously, where you can just feel you can see the confidence that they build with the knowledge that they gain. And so we're a real small team, and one of my team members she's a real puzzler, and she doesn't do puzzling in her spare time. She does it at work. And so we look at it as, what are the different pieces, and why not put everything on the table and do it right up front? You can't anticipate everything, right? But what are your 6-month goals? What are your, where do you want to be in a year? Where do you want to be in 3 years? And then try to piece all those things together in consultation with, a crowdfunding professional like yourself and a banker. And you may never need a loan. Crowdfunding may, satisfy your needs forever. It's a super powerful platform, but maybe it won't. And so it's really good to establish those relationships with bankers in our Business Resource Center and, a financial institution. At the very minimum, you're going to need to put your crowdfunding proceeds somewhere, right? So you might have a deposit relationship with someone, but I think really look to us as part of your advisory team. We can really come in at those early stages and just create a blueprint for how you want to do that going forward.
Well, you were saying something that we talk about a lot at Crowdfund Better, which is the capital stack. Mm-hmm. So I'm just going to ask you, how would you define the capital stack?
Right. So I think it's, it talks a little bit to, speaks a little bit to what we were just talking about, but how do you layer the various elements? When I talked about the injection and how creative people can get with pulling things together, those are all elements and variables. And so, perhaps an example of that would be, let's say we have a business owner who does a crowdfunding campaign to purchase and outfit a food truck, for example. But then they need the funds to get on the road and start making sales, and so they need fuel and propane for their cooking utensils, whatever it is they're using. They need event fees so that they're able to get in there and run their businesses, and so maybe that element that they've just crowdfunded for, that can be collateral for a loan so that they can get working capital to then take care of the things I just talked about. And then maybe they have such a following that they're going into a brick and mortar, situation. And maybe that's an opportunity where equity crowdfunding could come into play, where people want to be part of that, that business, and there's such fervent followers of them. So I can see, multiple pieces of it.
It's interesting because I think people think traditional lending is very, in a box, and what we're talking about tonight is very creative.
Right.
And so I'll just share with you, I have a client that used rewards crowdfunding to begin the process of really investigating, could he build this business? Mm-hmm. And his community came and supported him to the tune of $100,000. But he needed $1 million to open the doors. Mm-hmm. So he went to private investors. They came in for another $250,000, but he was still about $600,000 short on that $1 million. And so when he went to the lender, it was interesting because he needed to go to a lender, and they weren't sure what to do with the crowdfunding funds. It was very early on. Yeah. But when it came down to the loan committee and making the decision as to whether he would get the loan or not, the deciding factor was that they saw that his community wanted that business, and he was able to get the loan. But he had to stack all of that capital just to open his doors.
Because it was a big ask, right?
It was a big ask.
Yeah. Mm-hmm.
And then he's now gone on to use investment crowdfunding to grow the business. So he's had like a full circle, crowdfunding at the beginning.
He's used every element within the crowdfunding, plus the traditional lending.
Yeah,
That's wonderful.
So I think what I'm gathering from this conversation is that we can really think creatively. I'm really excited that you were here tonight and you willing to chat with me about it. Mm-hmm. I think that you're on the cutting edge. I'm just going to say that for your willingness to talk about crowdfunding and to how we can work together. And I appreciate you being here with us and sharing all of your insights. Thanks so much, Gina.
Oh yeah, absolutely. I really appreciate it, and I so appreciate the education you've been giving me, and I really look forward to partnering going forward. So thank you.
Stay with us.